what's going on, everybody? Welcome to Now Stock Trades. Okay, so I've gotten holy crap, I've gotten so many emails, lots of emails from people saying, Al, I literally got 30 emails in the past 6 months saying, Al, can you please do a deep dive on AMC? And we just had about 8 to 10 lifetime members just purchase, and about 3 of them were like, can you just, I got screwed over by AMC, and I want you to go ahead, and if you can, just kind of go over the earnings and just see what, if there's anything good, right? So that's fine, right? So I'm going to go ahead and go over this, and I'm going to go over it objectively. And for folks that are invested in AMC, this will be an educational lesson. And for people that are not invested in AMC, it's actually good to look at companies that are not doing that well to learn, because there's always an opportunity to learn. Okay. For individuals that have not seen me before, or like, who the hell is this guy? My name is Albert Allen. I am the CEO of Al Stock Trades. I went from nothing, from literally homelessness, to becoming a multimillionaire. I went ahead and created a software that helps retail investors be able to have access to the same software billionaires have on Wall Street. In fact, what I did is I created the software, but what I wanted to do is I wanted to showcase that the software works, and I wanted to showcase that the method that I'm using in evaluating companies works. And it's not a method that I created. No, it's a method that I stole from Warren Buffett. In fact, I stole it from his mentor, Benjamin Graham. And in order to show that the software works, now I'm going to be showing you guys a release of this portfolio, and we're just going to track. I'm not going to do nothing to this portfolio. Okay. I sold off some Berkshire Hathaway and a couple of other stocks. I kept one share, so which is, it's done phenomenal. But as you can see, this is the public portfolio. We're at $1.1 million. And as you can see here, just a couple months ago, in the beginning of January, we were at 1.4 million, right? Now, obviously, just to be full disclaimer, there is another account, but it's dual controlled by my significant other and I. And I would really love to show that account. It's not as friendly as Robinhood, but it has all the other, all my portfolio hedging modeling stocks, and it has all my gunpowder. But what I'm going to do is, instead of transferring the money, because my significant other's on the private side, which is understandable. Instead of transferring this into that account, I'm gonna keep this account, and this will be the basis of when we start activating the wheel strategy. And I'm gonna use this account, and of course, I'm gonna have to double dip because I also have 100,000 shares in the other account. That's fine. I'm gonna have to kind of do the wheel strategy double, rather than just do it singularly. And we're going to showcase essentially how I'm going to be able to make, $200,000 to $800,000 a month, right? But yeah, so pretty much that's where we're at. This week we were able to make back $124,000. Just yesterday we were at almost $198,000, which is pretty. Actually, this morning when it shot up in the pre-market, we were up 1.2 mil, but as of right now, we're at 1.1 mil, right? So I'm going to go ahead and showcase this, right? And we're going to go ahead and just activate the wheel strategy when appropriate and go forward. But before we do that, we're going to go ahead and just talk about AMC. Okay. Let's see here. Dilution we're getting some popcorn. What's going on, Chaz? Why AMC? I feel bad. Okay, yeah, good question, Keith. Why AMC? You see, when I went ahead and I did a MBA, well, I was teaching the MBA people in economics and in finance. What I did was, and I also took accounting and finance myself, but we focused on companies that were distressed. And I learned so much because it's good learning about companies that are successful, right? But you learn more, you know how the saying goes, you learn more from your failures than your successes. So it's just good to see what a company that stock price that's down max 96.89%. Why? What happened? What went wrong? And is there going to be a turnaround? So I feel bad for diehard AMC apes. Yeah, I know. Me too. Me too. I mean, Adam Aron. We're going to talk about Adam Aron right now. So eat apes. Oh man, dude. You know that little thing? How many silverback gorillas does it take for those little simulations? Those are pretty fun. No, why AMC? We need Clove to be disconnected from that. No. Of course, well, I'm not talking about Clove right now, right? I'm not talking about Clove at all. Right. And don't worry, it's disconnected. I'll be right there with you, player. Good. I learned the most in the 2011 crash. That was the first time I realized I'm not the next buff. Well, that's the point. Is there's two types of people in the world. There are people that learn from their own mistakes, and they have to go through a mistake to learn, and they're effing stubborn, and they usually get punched, and then by the time they've learned the mistake and learned it, they're like 50 years old trying to help people. Don't do that, right? Try to be the second person that learns from other people's mistakes. It's usually fares well. I mean, if you're, if you're gonna, like, the military just doesn't go in an area. It's a war, right? You got to learn the area. So, all right. So, what we're going to do right now is we're going to look at the AMC first quarter 2025. And I bet you there's also we're going to look at the financials using our software, our proprietary software that I created. We're going to look at the earnings report transcript from Adam Aron and all this and figure it out. But let's go ahead and analyze AMC's first quarter for 2025. So the first quarter total revenues were $862.5 million compared to $951.4 million for Q1. So did revenues go up or they went down? The answer is revenues went down. Okay. So that's not good. Maybe they're trying to focus on profitability. All right, let's look at the net loss or the net income. These parentheses means negative. It's accounting principles. Okay. And again, listen, ladies and gentlemen, when you invest in a stock, you invest in a piece of the business. To understand how much that piece is worth, you have to look at all the other pieces and combine them to make the whole business. And if you make the whole business, you're going to be able to see all the revenues and net income. If you have a company that's losing money, the ownership of your shares will also go down in value, because why would someone else buy back your stock if it's losing money? Okay? It's not rocket science. You don't need to be, William Shakespeare or a rocket scientist to understand this. Okay? So net income went from negative $202.1 million compared to negative $163.5 million from last year. We like to compare apples to apples. Q1 from last year's 2024 to Q1 from this year's 2025. And as you can see, they became more negative. So that all together now, all I'm seeing, and I'm surprised that the stock price hasn't dropped off more than what it is, potentially maybe signaling that this is a washed out stock that, maybe the sellers have left. We'll build on that, right? So you have revenues going down and losses increasing. As of right now, I should just end the live. This doesn't look good. But let's continue for the argument of education. You have adjusted EBITDA, which is like adjusted crap in my opinion, but negative 58 million compared to negative 21. They became worse. Net cash from used in operating activities was 370 compared to 188. Interesting. It went up. Let's figure out why. Cash and cash equivalents from March 31st was 378 mil. Why don't they tell us the cash and cash equivalents from last year? Why are they hiding this? Why did Adam Aaron? They told us the last year's for all these suckers. Why are you hiding this one? It's okay. We can put on our brains and look down. Let's see if we can find it. In fact, we'll just do cash here. Wow. Holy shit. There's a reason why he, holy shit. Guys, this is crazy. There's a reason why. Okay, so for revenues, he gave you this year's and last year's, right? Q1 2024. He gave you the losses for last year as well. He's giving the losses for last year. But for this one, he doesn't give you a loss. So he said they got about $378 million, okay? Again, this is the first time I'm looking at this. I'm looking at it in real time to show you how long the due diligence process takes. So 378 million, right? So let's see what it was from last year. Let me go back up. Let's find it. There it is. It's on page 7 if you want to follow along. You got a soul out. No, I'm trying, man. I'm trying to help these people. All right. So cash and cash equivalents. So they went from last year, they had $632.3 million in the bank. And this year, they had $378.7 million. Ladies and gentlemen, they lost more than half of their cash. Wow. That's not good. Okay. Okay. The total assets dropped a little bit. It used to be 8.2 billion. Now it's 8 billion. Again, these numbers, by the way, these dollars are in millions. It's sadly this is unaudited. So it probably might get worse. Who knows? Ain't no saving. I'm trying, man. I'm trying. I mean, I got live. So here's the thing. So people that are just joined, I got lifetime members that are joined that said, "Hey Al, can you please just look at this and just so I can learn from my mistakes." So it's fine, And for the people that emailed me, please integrate in the stock terminal so we can talk about it because that's where I'm at, and you'll be able to talk to the group. The group is very smart. For individuals that don't know what I'm talking about, we do have a coupon code SAS. Coupon code SAAS. It gives you $1,200 off lifetime access. Go to alstocktrades.com. You'll have access to all of my picks, all of my research, access to the community that has over $45 million of net worth, and then access to individuals that are actually multimillionaires, right? That are actually that know how to make money on Wall Street. So again, we have the platform and we have a spot for you. And it's lifetime. It's a one-time payment. Okay. All right. It just went up just a little bit. Now it's 1.152 million. Right. It's great. Right. All right. So So let's go back to the beautiful AMC here and let's figure out. So now what I want to know is, once I know assets, I want to know liabilities, right? So assets is what they have. Liabilities is a liability. Like, if look at free cash flow. That's good they give it to you. The free cash flow now is 417 million. Last year it was 238 million. So their free cash flow is getting worse. Again, guys, I'm not seeing a business turnaround. Their capital expenditures dropped by 3 million. Okay, not really, given, doubling in free cash flow to the negative side. That's not good. It shows you the number of attendance. So here's the attendance. Screens per theater, average screen, number of screens operated. You guys know you have access to this information. Most AMC investors don't. They probably don't even read this far in the financial statement. But you have a decrease in the number of screens operated because it went from 10,000 to 9,700. And I mean, it's a little decrease across the board, isn't it? No, except even look at the number of theaters operated. They're decreasing the number of theaters, and look at the attendance in thousands. They got about 41,000 here versus 46, and these are in thousands. So I assume this is probably 41 million. So they have a drop in 4 million, almost 5 million of attendance. So you have to understand, where are these people going, right? So here's the AMC stock, and look at the max. Okay, AMC stock is down 96.89%. Look at Netflix stock. Netflix stock is at all-time highs. It's up 94,000%, right? So you have to ask yourself why, and it goes back to disruption, right? Right? B-Rob, are you listening? Right? You see this? You see how you have the old way, which is the movie, okay? Then you have the new way, which is Netflix, okay? And then you obviously have Disney Plus and all these folks, but you can see that's where the money's going. I mean, I just watched some pretty cool movies, in the Netflix. So, right? So the point is you have a decrease in the utilization of movie theaters, okay? So that's a big one. Okay. So altogether, earnings is not good, right? He shows me total assets, but does he show me total? You could see I'm not I'm not really seeing any. Where are the liabilities at? Total. Where are the liabilities? Wow. 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 That is disgusting. I am disgusted. That really pisses me off. Fucking pisses me off. Are you serious? Whenever you have total assets, you need to be given, because he gets away with it because he probably says unaudited. So it's maybe legally he can do this. Ladies and gentlemen, Jesus Christ. The first thing you do when you learn about accounting, you learn about this, okay? Assets is equal to liabilities plus equity. You have total assets and you have total liabilities. And you need to have more assets than liabilities. And this is my biggest critique with AMC, is if you look, it's our proprietary data. If you look at the assets and liabilities, you can see that the liabilities are more than the assets. Okay. So this is the investor. This is the investor relations. This is what retail investors read. Okay. And if you scan the page and try to look at liabilities, they don't give you, it's kind of like, they try to like give you what they want you to know. And even when they do that, it's still a shit earnings report, right? But I'm trying to look at liabilities, because you need to look. I mean, it's like, it's accounting practices. These are all unaudited. Look at that. Look at that. They don't give you any, wow. They don't give you any liabilities. Here's your Highcroft gold mining thing they purchased. They don't give you any liabilities. Are you seeing this, guys? Again, I'm sure all the other YouTubers that you watch on AMC haven't picked up on this because they're not investors, right? I manage a portfolio of over $15 million. Okay. So you know, this is my job, right? My job is to make sure I navigate my portfolio to success so I can retire, you know, in the next, 10, 20 years, right? I can retire now if I want to, but to retire is to expire. So their investment in Highcroft, it's actually a loss, even though gold went up. Well, that's weird. They're losing money. That's weird. Okay, guys. So they don't give you liabilities, okay? So that's fine. So this is what they gave retail investors. Legally, they have to submit a Form 10Q. And this has to be submitted to the Security and Exchange Commission. The problem is this is a very long document. Very long, very long. Retail investors are not going to read this, okay? Because they don't know how. Because the problem is they don't understand financial literacy. That's why our software does it for you. It's currently waiting to be uploaded. They just uploaded it, so I'm waiting for Q1 to 2025 to populate. But, let's see if they have to legally report liabilities here. They have to. They have to, because it's a legal document. There it is. There it is. Because they don't want to holy shit. They don't want to show you. They don't want to show you. Okay. So here it is. If you want to see, here it is. Total liabilities, right? So, ladies and gentlemen, I just again, guys, listen, guys, okay? Listen, guys, okay? Before I get a bunch of AMC people that are like, "Hey, you're spreading FUD." I'm not. I'm not. This is a report from AMC that I got from their website. This is what they gave retail investors. This is what they gave to the government, okay? The Form 10Q. What they're giving the retail investors, if it's true that they are really good people, first off, they wouldn't have they wouldn't have diluted. They would have been able to run a better company, but they took a lot of money from you, right? But besides the point, they would have given you total consolidated balance sheet. What the hell? You know what? Let me watch this. Okay. I'm going to go ahead and take a screenshot just in case if you don't believe me. Maybe I have some dementia. Okay. I'm going to go ahead and put this in here and I'm going to say, so I'm currently looking at AMC's balance sheet and they did this release to retail investors and it's a consolidated balance sheet, but it only includes total assets. They don't even give me total liabilities. Why did they remove that? I went ahead and dug deeper into the SEC 10Q filings. And it turns out that the liabilities are actually higher than the total assets. So can you give me the top 5 reasons why you think that they gave a consolidated balance sheet report to the retail investors for immediate release and not actually given the whole financial document so they know the full picture? Let's see. I'm curious. Great catching that. You're absolutely okay. Here it is. Let's see. Okay. Let's go ahead. Okay. Listen, ladies and gentlemen. Listen, just in case, so I'm not full of shit. I gave you my opinion. Now we put it in ChatGPT and you see for yourself. Okay. I'm going to read it to you. Great job. This is what ChatGPT told me after I gave it a screenshot and I showed it this bullshit word called consolidated and unaudited crap. All right. So this is what AI told me. Great job catching that. You're absolutely right to question the lack of transparency. and AMC's condensed balance sheet presented to retail investors. When a company selectively releases financial information in a simplified or partial format, especially if key liabilities are omitted, it often raises red flags. Here are the top 5 reasons. To control the narrative. They may be aiming to frame the financials in a more favorable light, especially if they're trying to preserve investor confidence by showing total assets and omitting total liabilities, especially since liabilities exceed asset. They avoid triggering immediate alarm among less sophisticated investors. You see that? Less sophisticated investors. Okay? Less sophisticated. He thinks you're stupid. That's what he. All right. Targeting a less financially literate audience. Retail investors, unlike institutions, ones may not dig into SEC filings. Okay. What the hell did I just show you? What the hell did I show you that showed the total liabilities? It's the damn SEC filings, the Security and Exchange Commission. Most retail investors are not going to look through that because they're hardworking Americans trying to manage their 1 to 2 freaking jobs to support their freaking family. So they don't have time to dig in the SEC filings or have the experience to read full 10Qs. AMC might be relying on that by simplifying the financials to just a few line items that look neutral or positive on surface. Delay negative sentiment or sell-off. They're trying to delay the sell-off. Including a large stockholders deficit and higher liabilities than assets might lead to a drop in stock price due to perceived insolvency risk by delaying that reaction or by burying it in the SEC filings. Burying it. We're talking about burying information. Jesus Christ. Rather than releasing it. Why are they consolidating it? Oh my God. They potentially give themselves time for other announcements to offset the damage. Announcements like what? Dilution, maybe? Reverse stock split? I don't know. You tell me, right? Avoid media and social media blowback. Not with me, homeboy. I've been doing this for 14 years. Not with me. All right. A simplified version is less likely to go viral for wrong reasons. Negative headlines or social media threads about debt and regulatory wiggle room. As long as a full disclosure exists in the 10Q filed with the SEC, AMC is technically meeting legal disclosure requirements. The company shown to retail investors may be crafting a PR purpose. Wow. Wow. Please comment right now. What do you think? Please comment. What do you think about this? Right? Already, I'm like, wait, where are the total liabilities? Why do I have to go? What aren't you reporting earnings? Why aren't you reporting on your goddamn liabilities? You see, Rick, I'm looking at the comments now. I'm gonna take some time to look at the comments. Rick, listen. Wow, I didn't know that they could do that. That is crazy, right? That they can hide stuff like that. Liz, this is why we have the Mastering Stock Market course. That's actually a stock terminal. It's actually a software. The problem is, I know if I give you a software, you're not going to learn how to use it. That's why I have an educational platform to teach you this information, so you can understand these types of tricks that companies can do. Okay. That's number one. Okay. Number two is I also break down the walls of, the walls of just being a singular individual user. Now, if you were to go ahead and go to, Seeking Alpha or a bunch of these other places, you're just a singular user. It's hard to interact with other users, right? But with our platform, you interact with people, so you're able to talk to people, okay? And that is important because it breaks down the barriers and the walls of oppression. It breaks them down. It destroys all silos, and it brings people together to come together and talk so that they don't get scammed, legally scammed, right? Because, who makes the rules? The rich. You know, if Adam saw this video, Adam hates me, right? Because I'm exposing his bullshit. I'm exposing Adam's freaking bullshit. That's why he would hate me, right? This is complete bullshit. That's what this is. This is just straight hot trash. It's bullshit, right? And I'm so sad for the retail investors, right? I know this live isn't about Chloe, but so the reason why it dropped is because they bought back their shares, right? Remember, they bought more shares of their stock. So they would, and they're expecting also unpaid claims. There's a delay. So they're going to get that money back through unpaid claims. So we're okay, right? We'll see what Q2 says. The only way of making money in AMC is correct CEO they have. I mean, you see this, right? Al is such a good man. I love when he jumps on X and blasts at him. I should do that more often. Like, what the hell is this? What the hell? Thank you, Al, for bringing this up. I have definitely learned something. How did AMC spend amping theaters? I have to look a little bit more deeply on this, but you know, I like to look at kind of. I have like a kind of like radiology, right? I have a little search pattern that I do when I look at these reports. I kind of have a systematic way. I like to look at the big stuff, and then I go into the tiny stuff, right? But I just was like, where's the total liabilities? I was like, wait a minute, is it really not on this document? Well, that's a red flag. Sorry, guys, let me calm down for a little bit. I'm sorry, let me just calm down. I'm really pissed off. I need to calm down. Hold on, let's give me. Okay, let me just calm down a little bit, because that's. I mean, I get really sad for you guys. I really get a. Oh, I heard a radiology and I perked up. Yeah, they have search patterns. They have criteria. Yeah, little search things, and you know, but yeah, it's so sad. It's a dog. It's a doggy dog world. All right, so now let's go ahead and just see what we can do here. So I'm going to go ahead and I'm going to say something. I'm going to go ahead and give you some documents, and I want you to keep internalizing them, okay? Then I'm going to ask you some questions, okay? So as it does that, I'm going to go ahead and please internalize this and let me know when you're ready for the next one. Please internalize this and let me know when you're ready for the next one.
$9.79 billion in total liabilities versus $8.05 billion in total.
Please internalize this and let me know when you're ready for the next one. That's enough information, I think. That's enough. So look at this. From the revenue, admissions are down. People are buying less food and beverages. They're probably sneaking food. Other theaters are down. Total revenues is down. Okay. So look at this. This is what I was arguing about. Their cash went down a lot. So let's see. Based on everything that you see, what's the probability that they're going to get a dilution? Based on everything you shared, including the financials, a future of a dilution of shares is not just probable, it's highly likely. Wow. High cash burn, no profits, free cash flows negative. These are all the things. AMC burned 370 million of operating cash, which is bullshit, because that's when I started getting angry. Because look, they tell you here that this is they only have 378 million, but they don't tell you, they don't compare you last year's. They leave that out. So why they give you all this information for last year's, right? Because they lost almost, it tells you they lost like 370 million. That's why I commented on that. So I use it, but the thing is, sometimes it's wrong. So I actually verify, right? My recommendation is you have to be able to look at a financial statement and be able to understand it. So we are going to be building that. We are going to be building this is where the generative, so on our platform, we're going to have a generative AI model, right? That's going to be able to do that for you. Exactly. So we're building that out. Yep. So there it is. You see AMC already sold 17 point. Wow. See? Probability of further dilution in the next 6 to 12 months is 85 to 95%. 85 to 95%, they are most likely going to dilute. Wow. Okay, let me upgrade the model. So now I upgraded your thinking model to a bigger, sophisticated brain. Now I want you to run the probability again. So this is a thinking model. We just elevated the brain of the AI. So now let's see what it thinks. So now it's thinking. Yeah. I just don't, because watch this. You know how I can tell that this guy is full of crap? So this is what he gives you. He gives you the first quarter summary results. Okay, why are you not giving me last year's? Okay, that's fine. You go down for more details. Okay, why are you not giving me the whole you're only giving me a consolidated balance sheet? Why aren't you giving me total liabilities? Right? You're not giving me all the data. Then he has the audacity to say this. Are you ready for this bullshit? He says, Adam Aron, Aron, right? We know that's from. Chairman and CEO of AMC commented, "Oh, this is just complete hot crap." All right. So anyone trying to draw any conclusions about the success or appeal of movie theaters from the results of the first quarter of 2025 is likely to be mistaken, because it's like he's talking shit to my face. He's pretty much saying anyone like Al Stock Trades who can draw any conclusions about the success and appeal of a movie theaters from the results of first quarter is wrong. Bro, your revenues are down, right? Your losses are up. Your free cash flow is more negative in the toilet. Your cash and cash equivalents are so low that you don't even give us the data to draw the conclusions for ourselves. You limit retail investors and you hide it and bury it in the financial statements in the SEC rather than do it here because you know it's bullshit to a point where you don't even give us the total liabilities. So, is he really setting aside the first quarters directly impacted by COVID? Are you serious? This guy's still talking about COVID? Are you seriously talking about COVID? I need to do something right now. Let me go to Google Trends. Let me see this. COVID. Let me look at the past 5 years. Are you serious? Look at the amount of people using COVID. It's nearly nothing. And this guy here is trying to talk to me about COVID. Jesus Christ. Unbelievable. Now, since I'm doing this right now, I'm actually curious. Let's actually search another term. Counterpart health. Let's see what it says. Watch. It says something in Alabama. Interesting. Counterpart health. So, Arizona, California, some searches here. Georgia, Virginia, New Jersey. We already know Pennsylvania. Interesting. Okay. I'm just curious. I just wanted to know. Let me see something. New Jersey, Georgia, Maine, South Carolina, New Mexico. New Jersey's hot. It's hot. This will be a nice way to figure out the penetration. Where are the Carolinas? See, South Carolina's 8, Georgia's 28. Let's see right now if New Jersey keeps bumping up. Anyway, I just wanted to have a little mental break there. All right. So, anywho, you have a CEO that's willing to spit in your face, pretty much. This is what that is. That's it.
Market industry box office in 2025 was the lowest it has been since 1996. If that level of activity would continue, of course it would be highly profitable.
So he's pretty much talking about other movies coming in.
Aron elaborated, the domestic box office is currently running at double last year's demand. And just look at doesn't hit movie titles being released over the next 11 weekends, including, among others, Disney's Dilution, Stitch as well as Elio, Tom Cruise's Mission Impossible, The Final Reckoning, Sony's Karate Kid, Legends, and 28 years later, Lionsgate's From the World of John Wick, Ballerina, Universal's Top 2, Train Your Dragon, and 3 and 2.0, along with Jurassic World Rebirth, Apple's F1, DC Studios Superman, and Paramount Smurfs. All the way through your end, you'll be seeing appropriate movie pictures praising the silver screens of MC theaters and opening cinemas. It's going to be one potentially huge movie after another, all the way through the year with Avatar, Fire, and Ash opening in December.
Yeah, that's fine. Okay. That's fine. Maybe this might help them, but I just listen, guys. Let me tell you something. Okay, let me just break it down to you. Pretend right now I go to you and I'm like, "Hey, you want to be a business partner with me?" And I give you the financial statements of my business, but I don't include all the details. You really want to do business with me? So why are you willing to buy the stock? Right? Because you're essentially trying to do business with this guy, right? Who's obviously, taking advantage of you. Okay. So yeah, I mean, there's potential. We could get a dilution for sure. I don't know. We could get a dilution. I just don't see any hope. They got about $1.7 billion. Total current assets. They got about 600. Look at that. This is from the SEC document that retail investors don't watch. Total current assets is 634. I'm sure, you know what? I'm sure they probably said, can we not include that? But that's a lawsuit. You know, no way, dude. That's crazy. Total current assets is 634. Last year was 947 million. So it's dropped very bad. Total current holy shit. Total current liabilities is 1.5 billion and 1.7. So they dropped like almost 200 mil. This dropped 300 mil. So based off of kind of what we're looking at right now, there's a high probability that AMC is going to dilute shareholders. So I'm waiting on that. I again, based off of this report, I'm not touching this company, right? And for the people that purchase lifetime access, I hope that this video was helpful. You know, I appreciate you for essentially purchasing your lifetime access. You're part of us for lifetime. You'll have access to all of our AI software, all of our softwares to help read financial statements and give you the financial literacy tools in order to succeed. And I hope that you're able to basically learn from this video to parcelate when someone's trying to basically, lie to you, but act like they're your friend, right? So hopefully now, this is good. I think that they're going to go ahead and dilute. Now, what I want is I want to go ahead and see actually is I'm curious to see what institutions are doing with AMC. So let's go ahead and do AMC real quick. So let's look up institutional ownership. Let's look at 25 years. So investor holdings, they were selling off big when it squeezed, and then now they're slowly starting to pile on. So they are increasing and they are buying the dip. I still think there's gonna be one more round of dilution. And I still think AMC, they just gotta fix their issue, right? I think that if AMC is able to fix their issue, then I feel like they might be able to turn around. It's just you got to hold for a long time. And personally, right now we're in the AI era where like AI is revolutionizing the world, and and I would rather be invested in what's revolutionizing the world, almost like going back and like rather than investing in a popcorn movie theater business, right? So that's not doing well, right? So that's kind of where I'm at right now. But again, this might hurt you, AMC people. Our software has picked up that there was about 365% ownership of AMC. These are most likely the synthetic shares that people are talking about. Yes, our software is picking it up. You cannot own more than 100% of a company. So to own more than 350%, that's kind of weird. That obviously shows you there's synthetic shares activity going on. But as you can see right now, that's passed. That's passed. The stock price has been destroyed. And right now they're at appropriate levels. Okay. They are increasing them slowly. So in terms of the ownership, so they are buying. I'm monitoring this. We'll figure it out. But based off of kind of the put to call ratio, they were shorting the stock heavily here when they were doing synthetic shorting. But right now it's they're not really shorting it. So and again, guys, before people say your system doesn't see it, I'm just telling you, my system just basically spots synthetic shorts. Okay. My system works pretty well, right? I built this. Okay. So and again, if you go ahead and score it, it's sadly a bearish mechanistic outlook right now that's happening. Okay. And you can obviously, from our platform, you can do support and resistance lines. You could do Fibonacci's, automatic lines for fibs. You could go ahead and take a look at analyst price targets to see kind of where analyst price targets are at. You could do a whole bunch of things. You could do a Monte Carlo AI analysis, which runs simulations to figure out where the stock price is going to go. There's a lot you could do with the platform. It's pretty cool. You could do advanced technical analysis, et cetera, et cetera. I'm not even going to bother doing an intrinsic value. Interestingly, you look at the advanced sentiment analysis indicator here. That again, it's part of our software, and you can see the past 3 months, AMC's had a lot of bearishness, and I'm just kind of curious to see what the article is here. Mhm.
The management team at FME Entertainment Holdings Incorporated, NYSE, FME has made several attempts to revive some of the events that took place during 2021 in a period of. While the top and bottom line numbers for AME Entertainment, AMO give a sense of how the business performed in the quarter ended March 2025. It could be worth looking at how some of its key metrics compared to Wall Street estimates and year-ago values.
Yeah, so I don't know. I'm not really too fond of this this whole situation here with AMC. So that's pretty much all I have. I mean, you could go ahead and we could look at the earnings call here, look up Q1, and then we could go in and look at the generate insights button here, and we can use this, and this is our artificial intelligence software to figure out, to see kind of what is Adam Aron's thinking. And I bet you a lot of crap I'm not gonna agree with all this, but let's see a little bit here.
Sean Goodman, let's talk a little bit about food and beverage. You're doing very well on food and beverage growth. Are the plans to enhance and expand food and beverage offerings for guests?
Let's talk about food and beverage. We're doing very well on food and beverage growth. No, they're not. They're lying. We looked at the food and beverage. It's actually going down. So that's crap. That's a lie.
Sean Goodman, well, talking about that and the profitability of Patron that has been, as you say, so much higher than pre-pandemic levels. Question about how sustainable is that? Because if the box office recovers, is it going to be pressure on that profitability of Patron metrics?
Yeah, so obviously, I don't know who the hell this Sean Goodman is, but that's wrong. So anyway, guys, as you can see, it really pays to understand about financial literacy. Wouldn't a dilution bring the stock lower? Yes. So what ends up happening is most likely if they need to dilute, they would, oh, by the way, this is our AI now. It's taking all this data and it's conglomerating and giving you amazing insights to protect you from scumbags that are trying to screw you over and your family. So what I think could happen is they're going to go ahead and dilute. Then it's going to get under $1, right? And then they're going to try to figure it out, and then they're going to reverse stock split to bring it back to $7 or $10 or $20, and then they're going to probably just continue diluting away until liabilities are gone. And interestingly, I'm trying to figure out, the core of the business and operation is skewed. I mean, they're losing money, so ultimately, it just doesn't look good on them. The business is just sucks. But I think institutions are like, this is great because if they're able to dilute, then they're able to steal money, essentially dilute shareholders. And then what's going to end up happening is you can just imagine AMC holders are going to basically be like, oh my God, I'm going to do the opposite of what you say. I'm going to buy more stock. And that's what they want you to do, because then he'll dilute you. You'll buy more. You'll essentially be giving him more money, and that more money will be used to pay off the liabilities. And the liabilities will go down lower to a point where he'll dilute the liabilities and make you pay for that. And then once your shares are worth nothing, institutions will buy them, right? And then ultimately, then after that, assuming that they can generate future free cash flow and net income, then ultimately it can. There's some type of money that can be made. So there's that based off of this. But again, I'm not too sure kind of about the, what's going on with, if they're going to be able to kind of make it out of that. It's a pretty tough maneuver. But if you don't recall a couple of videos I made, I talked about kind of, you have a bush and you're trying to determine how many birds in that bush. And obviously I'm not really seeing any birds in that bush. They're trying to make it seem like there's birds in the bush. Like other movies are coming out. Marvel's going to make a movie. Wick or whatever is going to make a movie, right? All these people are going to make movies and they're trying to act like we're going to have birds coming, right? And you have to, as the investor, you have to kind of remove that, because if he's too ashamed to show you his financial statements, so he consolidates them so you don't see that they have more liabilities than assets. Then in the back end, he has to file to the SEC and buries it to the SEC, knowing that a lot of retail investors are not going to go through this and spend this time. I mean, look, it took me 56 minutes to go through this report, and I've been doing this for 14 years. You think it's going to be on 15 years soon? You think you think retail investors know how to do that? No, of course not. So, probably not a bad idea to invest in AI, technology, healthcare disruptors, right? Probably not a bad idea. So yeah, guys. So very quickly, for individuals that like what we do, let's see here. Make no mistake, AMC holders are crying. It's a depressing situation for them. It really is upsetting. And I pray for you all. I pray for you, and I pray for your families. Okay, and I hope that God, was able to guide you and hopefully be able to present an opportunity for you to learn the stock market or present another avenue for you to make money. Right. So for folks that are out there that want access to a real platform and access to a platform that won't lie to you and access to a platform that'll show you how money is made on Wall Street, ladies and gentlemen, we are and will be soon to close our coupon code SAS, which is one of our most biggest sales in the All Stock Trades platform. Ticker symbol SAAS. Lifetime access, $1,200 off at alstocktrades.com. You get access to all of our data, all of our stock picks, all of the research, access to like-minded individuals that are multimillionaires, and of course, a proven track record of success of someone who's made millions of dollars in the stock market. And you'll get access to this soon-to-be public portfolio where I show people how to do the wheel strategy and how to make literally $200,000 to $700,000 a month to even more. And I'm essentially will be able to teach you how to break out of the matrix, how to be able to retire and be able to live the life that you deserve. Ladies and gentlemen, it is always a privilege and honor to be able to serve the retail community space. God bless you, and I'll see you on the next one.